Hey everyone, this is Patrick from EasyFX Code Trading System, and this is Saturday, the 13th of November, 2021. And this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the third week of November. And let's begin with the Euro. Where basically there was only one major news event that triggered the bearish move on Wednesday. That was from the US CPI figure, which was better than expected. And in start of the week, it has only managed to climb up to pull back into the 116 level, which we had marked here last week, and also where the monthly pivot was. It's just below the 116, and then on Wednesday it just fell through the 115 and continued to drift lower for the last couple of days of the week, but did not manage to reach the 200 pip extension of this reversal move. We can also move this down here where the 138 pip extension will be just below the 114 at 113.77. So that's next possible target, 114 round figure level, and as well as the next fib extension we'll see compared to this. The 200 is above the 114 at the 114.19 area. So at the start of the week, could just drift down to hit that level before it retraces. So it may not drop to the 114 straight away. So for now, we can remove this level, move the resistance level down to 116, right at the, along with the monthly pivot. We can remove this one here at the 115. And if we also just take a short-term big reversal move here from the low of the previous week to the high of the previous week, it has a confluence with this 200 pip extension right at the 114.20 area. So that could be another short-term fib you can use. Now let's remove that first. Right, so this area at the 162 fib, which was intermediate support, will now become resistance zone. And that's at 115.13. And we can mark the support zone at the 114. Okay. Let's take a look at the weekly time frame. And for last week, it was definitely a continuation bearish candle that started from a couple of weeks ago. And it's likely going to fall through to 114 area. But yes, in the near term, it's looking bearish for the euro. We also take a continuation move here. They could even continue to target the 113 area. That's where the 162 fib extension is of this bearish continuation move. If we take a reversal, then it could hit some intermediate support first at the 162 fib extension at the 113.57. Right, so likely we'll target this first. Let's go back to the daily time frame. So that's on this bigger swing move, where it had gone past the 138 fib extension, the 162. It's a possible target below the 114. So we could also add another support zone here. Let's mark this potential target here. In the event that it punches through the 114 round figure. Okay, so that's on the bigger time frame or the bigger swing. We can also just leave the shorter term reversal here in red, and that's the 200 fib sitting there. Okay. Right, we'll just leave these two fibs for now. So next week, there's only a couple of minor news for the Eurozone and also some minor news from the US. So no major fundamental drivers there. But if you were looking to trade last week to, unfortunately, there's only one major move on the one for last week, a couple of days of consolidation towards the end. You could have used a short-term reversal fib here, either at this using this continuation move from the swing high to this swing low to target the 138 fib extension. Right, but it was a fairly small range. So this is a more likely scenario here with the 162 fib extension, which has a confluence with the 200 fib of this reversal. So down at the 114.20. right? But for last week, yeah, you could only try to target the 138. Okay, we'll take a look at the US dollar index to see how the CPI figure, which was better than expected, how that boosted the US dollar. So on the DXY, you see that it has punched through the resistance zone at the 94.50 area, went through, and it's on its way to target the 138 fib extension. So this was the previous resistance. It will now be support. Right, and let's mark this resistance zone at the 95.50 area. So that's going to be the target for next week, along with if we look back on the weekly, there's this swing low from the past, and that's let's get the accurate read here, 95.63. So that's the target zone here between 95.50 to 60. Okay, so after the previous week where it could not break through this multiple resistance area at 94.53, it pulled back, and after a couple of days of pullback, it did not close below this swing low here. This swing low here, and on Wednesday with the higher than expected CPI figure, this punched through the resistance and continued on Thursday, but slight pullback on the Friday because of the consumer sentiment index, which was slightly lower than expected. So, but it's only just a minor pause. Okay, let's move back to Euro and take a quick look again at the weekly time frame. And yes, so 114 is within sight, and then below that at the 135.60. Okay, move on to the cable with a similar story, but after the close of the previous week with the doji, it continued higher to retrace and test the 136 resistance zone and close as a doji again, which signaled a possible reversal, which it did. And this was a strong evening doji style, and that was the US CPI figure on Wednesday, which drove the pound lower as well. and continued into the 78.6 fib retracement of the bigger swing that's in blue. We'll take a look at that later. And then on Friday, it managed to recover somewhat on the poorer consumer sentiment figure. So climb back up into this, retest this swing low. Okay, just above the 134. So let's update the fibs if we need to, and this support zone. So definitely a lot of resistance zones up here. Let's clear some of these first. 136 was a strong resistance. And the next possible target will be the 133 round figure. Let's also flip this fib reversal to an extension. And below the 133 is the 138 fib extension, and that's at the 132.50 area. So there could be a potential support zone down here. Let's also mark the 133. And for last week, although it's a fairly small move, it high was around the 136, dropped about 200 over pips down to the longer term fib, which is this swing move on a bigger time frame, and there's a retrace back to the 786, which is near. It's just below the weekly 200 EMA now. Okay, so that's the 786 at the 133.70. And for last week, if you wanted to take a reversal move, you could, and that's the target at the 138 fib extension of this reversal move, and that was hit exactly at the 133.55 area before it recovered. So if it does continue to fall again, it will drift down towards the 133, and then the 200 fib extension also closely aligned with the 138 fib reversal at the 132.42 level. So let's see where this pullback could move up to. So let's possibly identify a already 78.6 retracement level. It's at the 134.60 area. Let's move this out of the way slightly. Okay, we'll see how high it's going to retrace. So could try to hit this 60 level. It may not get all the way to the 135. So could bounce off the swing low before it extends lower. So let's see, this could be multiple triggers next week. There's jobs data, there's CPI, and then on Friday, retail sales. But this first two news could be driving this movement for next week until the middle of the week. So watch out for that. Okay. Let's take a look at the weekly time frame as well. And it's supported apart from the 786 retracement level. The weekly 200 is also there, just below 134. So we'll see if there's any strong support for next week. Otherwise, if the data is lower than expected, then it could continue its bearish momentum. All right, so let's move on to the Aussie dollar. And likewise, the Aussie dollar was bearish after a small pullback. It was a relatively small move back up to hit the resistance at the monthly pivot, which is at 74.24, and then dropped for 3 days in a row right down to 0.73. So that's the key support zone here. So basically fell from just above 0.74 and then down to 130 pips down to 0.73 before Friday. It found some support, bounced back. And we'll see whether this is going to provide strong support now. So 74 is definitely a strong resistance zone. Can clear these levels now. So this was basically a bearish continuation move from the previous week after the RBA decisions, and fell to the daily 55 EMA, and then found some support, but then the monthly pivot is there to provide further resistance along with the daily 200 EMA, and then continue to fall. Let's see whether there's a possible move lower, possible dip to this 78.6 retracement level at 72.50. We can also update this fit to this area. And the 78.6 is still 72.53. Okay. And possible retrace could be back up to the 50 fib. There's a couple of touches here. So this could be the potential retest area for resistance. So let's see if it's able to test this or break through further. And target the 76 retracement. Right, there's the monetary policy is separate from the interest rate announcement. So this Tuesday, there's the RBA monetary policy minutes here. So we'll see whether there's anything that they can discover from there. All right, so this potential range is only about 100 pips compared to last week was slightly more, but it's possible range for next week. Let's also take a look at the weekly time frame. And also this time it's dipped below, slightly below the weekly 200 EMA compared to the other two pairs. But it's still looking bearish for the short term. So there could be one more dip, we'll see. Okay, so do check out my other videos on spot gold and dollar yen, and have a safe week and a good trading week, and cheers for now.